Today we have a returning expert. We love the session that Sam from The Comic Accountant did with us probably a few weeks to a month ago. It was so epic that we featured it in the newsletter again. And today he's going to be talking about pay yourself with these 3 simple steps as a business owner. One of the things that we struggle with so much as small business owners is knowing how that all works. When can we pay ourselves? How do we make that happen? We all want to get paid. And this was requested actually in the last session. So we popped it in there in the calendar. So I hope you guys enjoy it. Now, if you have any questions for Sam, he's really great educator. Please pop them in the Q&A, the chat function, or any of the comment sections on any of the platforms that you might be tuning in on. Now, I know that he always has lots of info to share, so I don't want to take up any more of his time. Sam, thanks so much for joining us again today. Honestly, big fan over here.
Hey, that's great to hear, Anna Marie. I'm always happy to help out my super fans out there. And more than happy to share the knowledge that we have over at The Comic Accountant. And totally 100% agree with you that one of the most challenging things as a small business owner is really trying to work out, how do I pay myself? Like, how do I make sure that I'm paying myself enough money to compensate for the time I'm putting into the business, and also making sure that I've actually still got enough money left in the business to keep the business running. And I often get a lot of questions from my clients and from some of our readers about like, wow, so can I pay myself a fixed amount every week? Do I put myself on a PAYE salary? If I take money out of my bank account, will the IRD come after me and charge tax on that drawings? Like, can they tell how much I take out of my bank account? Oh my God, they watch my bank account. So yeah, I actually wrote this article a couple of months ago, mainly to address those kind of questions. And the article itself was really, really popular. And so we've actually devised this a training that goes along with the article. And today I'll be sharing with all of the viewers out there the sort of rundown of what we at Sam Harith, the Comic Accountant, like to call the 3-step method towards paying yourself, right? So without further ado, let's get into it.
Awesome. I'm going to stop my video and let you drive.
All right. Hi there, team. Welcome back to yet another Digital Boost session with me, Sam Harith, the Comic Accountant. And today we're going to talk about how to pay yourself as a small business owner. So in today's session, we are going to look at how we can pay ourselves using the 3-step system. So first of all, we're going to take a look at sorting out our expenses. Now, what are our expenses? Our expenses are the things that we spend on our business in order to keep it running. Obviously, we want to make sure we still have enough money to run our business before we pay ourselves. The second step that we're looking at is taxes. If you're living here in Aotearoa and Z, you have to pay taxes. It's a fact of life. We don't have a tax-free system in this country, but hey, taxes help make this country a better place. So it's really important that you pay your taxes. And finally, we'll talk about balances. And balances really just means that you're making sure that you've got enough money in your accounts to do the things that you need to do. Right. So first of all, let's look at expenses. Expenses talks about the things that you need to run the business. Now, before I go further on into this discussion, it's really, really a good idea to talk about the different business bank accounts that you set up for your business. Now, if you recall in our last session, in the awesome self-employment startup session, we talked about how setting up separate bank accounts for your business is a really good idea. So you'll find that in this session as well, I will be referencing your daily spending account, your tax account, right? Your GST account, okay? We won't make any mention of the war chest account, which if you'll remember the previous training, because it's not really part of the system, because whatever stays in your war chest is there for long-term business growth, right? So we're really going to be focusing on these 3 bank accounts, right? And if you haven't set them up for your business already, I highly recommend that you do so immediately, because it's a really, really powerful and simple system to manage your finances. Cool. So with that out of the way, let's get straight into the first step, which is expenses. So when we're talking about expenses, we are really talking about what is your monthly baseline. All right. So this means that taking a look at your monthly expenses on your profit and loss report. Okay. And you can generate your profit and loss report using your favorite accounting software, or you could talk to your accountant and get them to generate a monthly profit and loss report for you. Now, with that monthly profit and loss report, you really want to take a look at what your monthly expenses are. Okay. And monthly expenses can include things like your rent, any subscriptions that you make to your software that you use, any licenses that you pay, any other professional subscriptions that you're part of, wages that you have to pay to your team, right? And finally, utilities like power bills and telephone bills and other stuff. Now, every business is unique. There may also be other types of expenses that you're spending on in your business. Like say, for example, if you are running a hospitality business, you'll be looking at buying ingredients. If you run a delivery company and use a delivery van, you will want to look at your fuel expenses as well, right? And let's say you are running a medical practice, you'll want to look at your professional indemnity insurance as well, right? Okay. And so every business is unique, and you as the business owner know better than anyone else what your unique business expenses are. So once we've determined what our monthly expenses are, we want to look at calculating our average monthly expense. Now, your average monthly expense, the easiest way to get your average monthly expense is to take a look at your 6 months expense and take the average of this, right? It's not a super precise science, but to keep it simple, that's what we will do. Multiply that amount, right? Multiply that amount by 1.5. Why 1.5? Because 1.5 gives you a good solid buffer, right? In case your cash drops too low, right? And your average monthly expenses times 1.5 gives you what we like to call, over at our firm, your monthly baseline, right? Now, with your monthly baseline, you want to never, ever, ever let your daily spending account go below this amount, okay? And this amount being your monthly baseline, all right? Never, ever let it go below this amount. Like, don't do it, all right? Okay, so the monthly baseline establishes how much money you need to have in your daily spending account to keep your business operational, to keep your business running, all right? And that ensures that you're never in a position where you don't have money to pay your team, to keep the lights on, to pay your phone bills, and to pay for your subscriptions, because these are important things to keep your business running. And so you always want that cash buffer. You always want that monthly baseline sitting inside your daily spending bank account. All right, cool. So if anyone has any questions, feel free to pop in, drop in a message, and I'll be more than happy to address it as we go along. All right. Okay, so that's expenses. And we've sorted out how we work out those expenses. Now, the next step that we're going to talk about is taxes. Now, taxes are a fact of life. There are two things in life which are certain, and that is obviously death and taxes. Hence why we've got Steve the Reaper here collecting taxes. Because yeah, that's sort of our comic take on it. Okay. And taxes are based on the profit that you've made during the year. Okay. And in today's taxes session, we're going to be looking at two types of taxes. We're going to be looking at income tax. Okay. Everyone pays income tax. And we're also going to be taking a look at GST. And some of you out there who are GST registered will probably find this part really, really useful. So let's take a look at putting aside money for GST first. So now let's take a look at putting aside GST. Generally speaking, 15% of your income should be put aside in your GST account, okay? And this is easier to calculate with an accounting software that has GST return reporting. So if you use an accounting software like Xero or MYOB, all right, you can actually keep track of how much GST you have incurred for the period. All right. And that allows you to know in no uncertain terms how much you need to have aside in your GST account for that period. If you're not using an accounting software, or maybe you don't quite know how to pull out that information, 15% of your income should be put aside in your GST account. All right. 15% of your income during the period should be put aside in your GST account. So to illustrate that, you're taking money out of your daily spending account, right? And you're putting 15% of your income into your GST bank account. Hi, Anna Marie.
Hi, Sam.
Hi.
We've got a question coming in through Facebook.
Awesome.
There's actually
Let's hear
quite
it.
a lot of people watching. It's
Let's hear it.
is
Yeah.
it possible to have a negative income at the end of the tax year?
A negative income? You mean making a loss?
I think so. Yeah, making
Yeah.
a loss.
Yeah, definitely. A lot of businesses who are in the startup phase often find that they're spending more money to get their business set up and running. So you might have a lot of initial startup costs, like say, for example, if you're in a franchising business, you might have to pay a lot of franchising fees up front.
Mm-hmm.
You may also be spending a lot of money in acquiring capital assets as well, right? And you can claim a lot of depreciation in the first year of business. And so these sort of expenses will often put your business in a loss-making position. And so obviously when your business is in a loss-making position, you don't pay any taxes. You don't pay any taxes, and that loss can be carried forwards to the next financial year. And then when you do start making money in the next financial year, those losses can be used to offset your profit, thus lowering the amount of taxes that you pay, right? However, relating it back to the amounts that you pay yourself, now the system we're talking about here uses drawings as a payment system, and I'll talk a bit more about that in the third part of the session when we're talking about balances, right? And I'm not going to give away too much right now, but drawings are not taxable, and we're going to figure out how does that work at the end of the session. Mm-hmm.
Cool. Second question here, Kia ora. So if you're not GST registered, do you still need a GST account?
No, you don't.
Okay, perfect.
Yeah.
Thank you. Great question. I'll drop off and let you continue.
Hey, awesome. All right. So yeah, hey, keep those questions coming, team. And I'm more than happy to answer them and address those burning questions as they come along. Right. So to keep it simple, 15% of your income ends up inside your GST account. And if we have some time after the end of the session, I'll even pop onto Xero and I'll give you a quick rundown of how you can actually pull up that sort of information on Xero. So it'll be super, super useful for all you Xero users out there. So now that we've talked about GST, all right, and we want to make sure that we do have enough balance in our GST account to cover our GST for the period. Let's take a look at income tax, right? So income tax, it's a little trickier, right? So the first thing that you want to do is that you want to work out your profit for the tax year so far, all right? So let's say you're looking at paying yourself today, all right? And so what you want to do, and today is the 5th of November. So what you want to do is that you do want to generate a profit and loss statement for the year to date. You want to see how much profit you've made, and then you want to put at least 20 to 30% of that profit you want to set aside for taxes in your tax account. Okay, so remember we talked about having a tax bank account. So every time before you pay yourself, you do want to make sure you have this amount, this 20 to 30%, right, set aside in your tax account. Okay, if you're feeling conservative, put 30%. If you're feeling less conservative, put 20%. Right. Now, some accountants may calculate this for you. So we actually calculate this for all our clients. We provide them with a bi-monthly report, which gives them, in no uncertain terms, how much money they should have saved aside for taxes in their tax account, right? So we're really, really strict with our clients. We really, really make sure that they're on top of their taxes, because that is super important. Right, so once you've figured out your income tax, again, we're transferring money out of the daily spending account, and we're putting 20 to 30% of your profit so far inside your tax account, okay? And so this ensures that every time you pay yourself, you're always making sure that you have enough money in your tax account. And so you're never gonna get caught like unawares in a position where like, oh no, I don't have any money to pay the tax man, right? Because remember, income tax is calculated based on your profit and not based on the balance of cash inside your bank account, all right? So let's make that really, really clear. Remember that tax is on profit, okay? It's on profit, right? Not on cash, okay? It's not on cash at all, okay? Right? Okay, and so your cash balance in your bank doesn't always match up with what your profit is, because obviously cash can be used to spend on non-business expenses as well. Like if you take drawings out of your business for personal expenses, okay? All right. So far, so good? Okay, cool. Now, before I go forwards, I do want to point out that this system could be a little bit different if you're paying provisional income taxes. Now, if you don't know what provisional income taxes are right now, chances are that you're not paying provisional income taxes, right? So we'll go back to the earlier system and make sure that you put aside taxes on a rolling basis. Now, provisional income tax usually only applies to individuals who have had a tax payable of more than $5,000 in the previous year. And so that means that in this year, they need to pay installments to the IRD to estimate their tax for the current year, okay? And so if you've made less than $5,000 worth of tax to pay, you're not going to get hit by provisional income tax. Now, provisional income tax is paid in installments. And so you would typically get a notification from the IRD when your next provisional installment is going to be. And so you should be saving up enough money to pay your next provisional tax installment instead of taking that rough 20 to 30% put aside, you know? Now, if you're paying provisional tax via AIM, which is the accounting income method, okay, you should work out the current income tax amount over the current AIM period you are on. Okay, if this doesn't make sense to you, that's all right. Don't worry about it. Okay, AIM is a little bit more technical, and oftentimes you would get your accountant to sort this out for you. So we have a few clients on AIM, all right, and they really like it because it allows them to pay their income tax on a rolling basis on the same time that they pay their GST returns as well. And it means that money goes out to the tax man, money doesn't stay inside their accounts, and you're not tempted to touch it, all right? But if you're interested in learning more about AIM, feel free to drop us a message at our website at shadvisory.co.nz and book in a session with us, and we're more than happy to talk through these different tax strategies with you. However, if you don't have provisional tax and you're not paying AIM, don't worry about it, all right? Just put aside 20 to 30% of your profit so far inside your tax account. Cool, all right. Now, we've identified what our expenses are. We've put aside money for our taxes. And so we've come to the final stage. Now, we're almost there. All right? We're almost there. We're going to get there soon. But we just want to make sure that we have the right balances inside all our accounts. Okay, this is just like another once over so that we can check that, right, we want to make sure that we have enough money to pay for our monthly baseline expenses. We've got enough money to pay for our GST. We've got enough money to pay for our income tax. So we want to make sure we have the right balances. First of all, do we have enough balance in our daily spending account to cover our monthly baseline expenses? So for example, if you've worked out your monthly baseline expenses to be $1,500, right? You want to make sure that you have this much inside your daily spending account, at least this much, all right? Okay, ideally, you want it to be more than this, right? Okay, so let's say we've checked our daily spending account and we have, hooray, we've got $3,000 in there. Wowee, that's like double the monthly baseline expense, okay? So if that's the case, we can say, yep, all right, we've got enough money, check. Second thing, do we have enough balance in the GST account to pay for this period's GST so far? All right, so let's say we worked out like, okay, cool. So in the previous month, we made sales of $1,000, right? So if we made sales of $1,000 times 15%, that equals to $150. Oopsies, missed the one, right? And so we check our GST account and we see that there's, oh, look at that. We put $170 inside there. All right, maybe we overestimated last time. Doesn't matter. It's still more than 150. So check, right? We've got enough money in our GST account to pay for the period's GST so far. And finally, we take a look at our tax account. Do we have enough balance in our tax account to pay for this year's tax so far? So when we pull up our year-to-date profit and loss statement, and we take a look at our profit, and we can see that we've made profits of $20,000. Woohoo! Awesome, right? And so we want to make sure that we've got enough tax money put away on this $20,000. And so let's say we're taking a 20%. So 20% times 20K, right, equals to $4,000, right? And so we want to make sure that we've got $4,000 in our tax account. And so when we take a look at our tax account, so let's say we've got $4,100 inside our tax account, we can go like, cool, nice, got $4,100 inside our tax account. Okay, now, obviously, if you don't meet the calculated balance for your GST or for your tax account, you are going to want to take money out of your daily spending account to make sure that you top it up and you top it up. Okay, now, what happens if you don't have money inside your daily spending account to cover your GST and your tax account? All right, let's say if taking money out of your daily spending account puts you below the monthly baseline expenses. If that's the case, you are going to have to sacrifice business expenses in order to meet your tax obligations. All right, now, generally speaking, you don't want to be in this position. All right, if you're in this position, then that could mean that you've probably made some mistakes or some mismanagement along the way, or you've been hit by a particularly bad business period. If you have been hit by a particularly bad business period, though, or if, say, for example, you're affected by the COVID pandemic, you can ask for leniency from the IRD, and they can actually help to either pay your GST and your other tax obligations by installments, or they can even delay the payments of those tax items, right? But if you're unable to request for that leniency, then you should be taking money out of your daily spending account, even if that puts you below your monthly baseline expenses, in order to pay for your taxes. All right, which is sad, but it's important. Okay, right. But hey, let's imagine that we've got enough money in our baseline expenses, and we've already put aside enough money for our GST account and tax account. So if you can check all these three boxes, awesome. Now it's time to pay yourself. So when you're looking to pay yourself, what we're doing is that we're taking, right, this pay yourself here, we're taking a drawing from the business, okay? Right? What we're doing is that we're taking a drawing out of the business. Now, the important thing to note about drawings is that drawings are not taxable. Okay. What I mean, I say they're not taxable, but let's review the lesson so far. All right. We've actually already put aside taxes already on the profit that we've earned in the business, okay? And we've already put aside taxes for GST, okay? So technically, whatever you're paying yourself is net of taxes, all right? You're not gonna get taxed on it extra, okay? That's the point I'm trying to make here. So yes, drawings are not taxable. Yes, but not really, because you've actually already taken the tax out on the profit in your business, and you're basically taking out whatever's left after those taxes, okay? So when you're paying yourself, you want to pay yourself the lower of your market rate. So have a think about, how much would I get paid if I were working in the same job in the industry? Okay, so let's say, for example, you're a graphic designer and you say like, all right, cool. If I'm working for an advertising firm, I could get $30 an hour, right? And I did about 30 hours of work this week. So therefore, I'm looking at paying myself $900 a week, okay? Right, or let's say you're a GP, you work for a you work for your own medical practice, and typically you get paid $80 an hour, right? Okay, and so let's say you're working 40 hours a week, right? So you want to look at paying yourself $3,200 a week, okay? Right? So that's what I mean by market rate. So you understand your industry better than anyone else. And so it's up to you to figure out what that market rate is for your particular industry. Or, all right, what is left in your daily spending account after taking away monthly baseline expenses, right? So which means that, so remember how we were using an example of over here of how we had $1,500, right? That we put aside for monthly baseline expenses, but we've got a $3,000 balance left in there. So let's say we're a graphic designer, okay? And we typically pay ourselves $900 a week, right? Okay. So which means that we want to pay ourselves $900 a week because we compare $900 versus the $1,500 that we have left inside our daily spending account. Obviously, this one is lower. This is the amount that we pay ourselves as drawings, okay? Now, if you take a look at the GP example though, okay, so GP example, you would normally get paid $3,200 a week, all right? So $3,200 versus $1,500. Now, obviously, the amount left in your daily spending account is lower. So this is the amount that you pay yourself. Because remember, the idea is that you never want to take more money out of your business account, out of your daily spending account, that would put it below the monthly baseline expenses, right? Especially if you're looking to pay yourself. If you're having to take out money for GST and taxes, then unfortunately you may have to do that. But if you're looking to pay yourself, you always want to pay yourself the lower of these two amounts. Now, what happens if there isn't anything left in your daily spending account after putting aside for monthly baseline expenses? Then, well, the unfortunate truth is that you don't get to pay yourself that week. All right, you can try again the week after or the next time you do that pay period. And so yes, and such is the nature of running a business. If you don't have enough money in your account to pay yourself, then you can't pay yourself, I guess. And it's entirely possible that if you're in a seasonal business, then perhaps maybe this week you made no cash, but suddenly you get a huge cash inflow in the coming weeks. And you can, if you want to, pay yourself for the weeks where you didn't pay yourself. But again, bearing in mind that you must never allow your daily spending account balance to drop below your monthly baseline expenses. Okay? So congratulations, you've paid yourself. Woohoo! Good job. Yeah, we finally gotten some return from our business. Awesome. Right? You finally feel what it's like to be a self-employed business owner. Hooray! Now, so what's next? Okay, so you've paid yourself. Woohoo! Awesome. Now you need to repeat this process every time you want to pay yourself. And when I say this process, I'm talking about the 3-step process. talking about expenses, taxes, and balances, right? And you want to repeat it every time you want to pay yourself. And so you can choose how often you want to pay yourself. You can pay yourself weekly, you can pay yourself fortnightly, you can pay yourself monthly, or if you're a real masochist, you can go bi-monthly if you want to, right? 6 monthly, it's really up to you, like it doesn't really matter, okay? Provided that every time you make that payment, you go through the 3-step process, okay? My recommendation is to do it weekly. Why weekly? Because this means that you're doing this whole process, you're doing it more often. More often equals to better. Why is it better? Right? Why is it better? Because you get used to it. Right? And the more you get used to it, the better understanding you'll have of how your business works. The more often you force yourself to look at your bank account balances, which I know, believe me, is a painful experience for a lot of business owners out there, right? Okay, it's like looking at your report card at the end of the school year. But you do want to force yourself to look at those business account balances. And so the more often you do it, if you do it weekly, you're forced to look at it every week, all right? But the more you do it, the better you'll get at it. The better you'll be at calculating your baseline expenses, your GST amounts, and your tax amounts on the fly, all right? And eventually it'll become second nature to you, right? And so you can even just take a look at your bank account balances and you can have a really, really quick idea of whether or not you'll be able to pay yourself this week and how much you'll be able to pay yourself this week, right? So the more often you do it, the better it is for you as a business owner. And it also helps you to build up that financial confidence, which is so, so important as a business owner, okay? And as mentioned before, this payment is considered drawings, okay, and are non-taxable, right? Simply because we've already put tax aside, okay? As a business owner, you'll be paying taxes on your shareholder salary instead. Now, I'm not gonna spend too much time talking about shareholder salary in this session because that itself is another session on its own and it's highly technical as well. I would highly recommend talking to your accountant about it, all right? If you want to learn more about shareholder salary. And shareholder salary only applies if you're running a company, okay? If you are a sole trader, then, whoopsies. If you're a sole trader, then you're only really just looking at drawings, okay? Just drawings over here, all right? Cool, all right. Now, you can do some extra reading. You can read the original Pay Yourself article here, all right? This is the article that got published a couple of months ago, right? And if you really, really want to learn about how shareholder salary works, we actually wrote an article about it. And we will be publishing an article on shareholder salary later today as part of Friday's publication run. So do subscribe to our newsletter and you will get the notification for that when that comes out, which is later today, right? Right, and so before we wrap up this training and address some of your questions, we are actually offering a personalized one-to-one session. It's just myself or one of our team members and you, and we'll work out your unique financial situation to devise a pay yourself strategy for you. Okay, now what we've covered here in today's session so far is a really general overview of how to implement the 3-step system for yourself. And there should be enough information in here for you to go and have a play around and see how that works for you. But if you want really specific tailor-made advice for your unique financial situation, and so we'll take a look at things like, you know, your debt level, right? Your family situation, right? Is your spouse, say, working in the business together with you? How does that look? How can we devise a payment strategy for you and your spouse, for example, right? And we'll look at any ongoing installment payments that you have. Say if you have a car loan repayment or a mortgage repayment, right? Or any other installment that you're on, okay, when you can factor that into your pay yourself strategy as well. And so at the end of this paid training, okay, we can identify your expenses needed to run the business, right? So it also helps to give a really great overview of the expenses required to run your business. You can become tax confident. And hey, look, we'll even give you a cool calculator, all right, which you can use after the training to work out how much to pay yourself every time, all right? And that should give you really super financial confidence when it comes to running your business in the future. So get in touch right now, all right? We can check out our corporate website, shadvisory.co.nz/management-consulting, all right? And we'll be putting these slides on Digital Boost website as well. And you can follow the link from there, and you can book in a session with us today or tomorrow or next week or whenever suits you best, okay? All right, cool. So remember, expenses, taxes, balances, and then you, that's you right there, all right? That's you, okay? Can get paid by your business. Ka-ching, let's go, money, yeah. All right. And I'll just put that up again, in case you missed it the first time.
Thanks, Sam, because I was trying to remember the second word.
It's called positive reinforcement.
Yeah. I'm just grabbing the web address for everybody. Yeah. I'll pop it in the chat.
Yeah.
Oh man, you're a rock star, by the way.
Oh, thanks. Thank you.
Okay.
All right. Cool. Yeah. So once Anna Marie's put it in the chat. So yeah, definitely check out our free comic blog for accounting, finance, tax, and economy. We've pretty much dominated the SEO when it comes to the comic accountant taglines and Sam Harith. So if you search for either of those names, you're gonna find our website on the top hit. And yes, and like always, I like to end with a comic. Right. So yeah, make sure you've got
fun
that
in
money.
Finance, Sam.
Yeah, I put the fun in finance. Right. So as always, you want to make sure that you've got enough money to keep your business running. You got enough money to pay your taxes, and then finally, you can pay yourself. And also, we've also set up a brand new YouTube channel, and we've got some educational videos coming up on that next week. All right. And in the meantime, if you like our comics, we've actually animated those comics on our YouTube channel. So jump in there, like and subscribe. And yeah, it's really cool. It's really cool. In fact, this comic right here is going to come out in animated form today.
Awesome. Yeah. We've got a question here. I'm just going to drop it in the chat so that you can see it well. So this is coming through on Facebook. So it says, wondering if you've heard of the concept of profit first in the book written by Mike. Is it Malkowitz? And
yes,
your thoughts on that?
Yeah. So the profit first concept means that you put your profit first before anything else. And it's a management concept that was actually quite popular in the early 2000s, late 90s. And the idea is that when you are budgeting, you take a profit first approach, meaning that you ask yourself, how much profit do I want to make from my business? So let's say I want to be able to make $4,000 a month from my business, right? And then you work your way up. So, okay, if you want to make $4,000, how much do you need to spend, right, to get to that $4,000? So then you're saying like, oh, I've got rent of $1,000, other bills of $2,000, right? And then you go to your gross profit. And then from your gross profit, what are your purchases, right? Oh, so I spend $10,000 on my purchases, right? So then that works out your sales amount, okay? And that helps to educate what your sales amount is in terms of achieving that profit figure, okay? And I think it's a great idea for business owners to wrap their heads around the concept of how much sales needs to be made in order to arrive at that profit figure, okay? And I guess if I wanted to illustrate it, I could just, hang on, I'm just gonna find a free spot here. Okay, so we're looking at profit first. So say your profit is 4K, right? And so you have expenses of say 5K a month. You've got to spend 5K expenses. So that means your gross profit, you need to have $9,000 a month, but you know that your purchases in terms of your raw material costs you about, say, $10,000. So which means that you want to make sales of, say, $19,000, right, a month in order to get that $4,000 profit, right? So that's how the profit first system works. I'll be completely honest. I'm not a huge fan of this system. And the reason why I'm not a huge fan of this system is because it creates an almost unrealistic expectation of the amount of sales you need to crack in to get the profit that you want. And I think often at the early stage for a small business owner, when you're starting the business, if it's only 1 or 2 years old, you don't want to focus on profit so much. And I know this sounds a bit contrarian, okay? You actually do want to focus on this figure here, all right? You want to focus on more customers, more sales, right? And if that means, taking a hit to your bottom line, so be it, all right? Get out there, get the customers, get the sales, right? Once you've got a fat customer base, once you've got a good amount of sales rolling in, then you can start working down the line, all right? You can work on tweaking your purchases levels. You can start working on tweaking your expense levels. You can start rationalizing your expenses. And then you can see what profit you have at the end of the day. And then you're paying yourself basically out of that profit, okay? Feel free to disagree with me on this. I'm sure there are other business advisors and other accountants who will disagree with me on this, but this is based on, I guess, my personal experience and my experience with my clients as well. Once you've got the sales, squeezing the profits out of that sales is easier than trying to aim for a profit and then figuring out how much sales you need. Did that answer your question?
I think it sure did. I don't see a response here.
Yeah.
I'm just trying to sort out, sorry. I'm just having a look on the Facebook just to make sure that they're quite satisfied with that response. Of course, that I really love how you draw things out, because I think for me that visual aid really helps me. Okay, there we go. Thank you. Very useful insight. Yeah. Thanks, Sulin, for dropping that question in there. Awesome.
No problem.
Yeah.
Yeah.
So, yeah, I love your sessions, Sam, because I think that this is one of the things that we struggle with so much. Is the money aspect is quite challenging. We might be great creators, things like that. When it comes down to the financial aspect, it can be really tricky. Yep. So yeah. And thanks so much for offering your time as well. That's
hey, no problem. More than happy to do so. And like I said, the philosophy that we approach with our clients, with all our accounting clients, is that we understand that you are the expert at your business. You are the best at running your business. Ain't nobody better at running your business than you. Okay. But that being said, since you're really good at running your business, producing, creating, and providing those services that you provide, your efforts are better focused on doing that instead of mucking around and worrying about your finances and your taxes and your accounting. And so that's where we come in. We love numbers. This is what we live and breathe. We love doing this. And this is what we are good at. So let us do that for you and let you focus on what you're really good at, which is running a business.
Awesome. A couple of questions here. It says, is there a template somewhere for a profit loss report?
Oh, heaps of templates for profit loss reports out there. To keep it really simple, you could even build one on a spreadsheet on your own. Let me see if I can find another empty spot here. Hang on. Yeah.
And I know you mentioned Xero at 1.2. Are you gonna?
Oh, yes. I did say I was going to show how to do those reports on Xero. Okay, but to answer the first question, so profit and loss is essentially your income, okay, minus expenses, and then you get your profit. That's all. And you can build this on any spreadsheet software that you want, Google Sheets, Excel, etc. Now, to maintain my promise from earlier, right, I will share with you, okay, can you still see my screen?
Yep.
Right. Yep. and just making sure that, yeah, okay. So, yep, so I'm on my personal Xero account, and that's fine. Nothing confidential in here. All right. And so if we were to generate a GST report for the period, you can actually pull out a GST report showing you how much GST you have incurred so far for the period. And that's really simple. So all you have to do is go to accounting, click on reports, go to your GST return. Okay. And so right now we're in the middle of the 1st November to 30th December GST period. Okay. And so, sorry, we're on the 1st October to 30th November GST period. Excuse me. All right. So I've got 25 days left in my GST period, as you can see over here. I'll zoom in. I can click on preview period so far. Now, preview period so far gives me my GST return, and it tells me that this is how much GST I have to pay. So this means that I want to take a look at my GST account, and I want to make sure that I do have that much money in my GST account. So if I were to look at my GST account right now, all right, and I go to SH Advisory GST, I've got $896. So I'm going like, oh no, I need $1,156. So I need to top up that GST account. Okay, so this means that the next time I pay myself, I do want to make sure that I have enough money in here to be able to top up that amount of money that I've calculated here. You see how that works? All right. And if you want to generate a profit and loss report, it's really simple. You can go to accounting, profit and loss, or accounting reports, and then profit and loss, right? And profit and loss is right there. Okay, and from there, you can click on your date range. You can go to this financial year. So this gives you your year-to-date finances. Click update, right? And you can scroll down and you can see the profit that you've made, right? And so that profit that you've made, you can take 20 to 30% of that and make sure you have that amount sitting inside your tax account, right? Now, bearing in mind that if you do have a part-time job, or again, like if you're on provisional tax, you know, this amount could differ, okay? Especially if you have a full-time, say, PAYE job and you're doing your business part-time, because your PAYE is already deducting taxes on your behalf, all right? And so that also adds toward your overall taxable position. But if this is your situation, then I highly, highly recommend that you pick up that phone or you send that email to us, and we'll organize a one-on-one personalized pay yourself trading session just for you, okay? But if you want to do it on your own, the information's all there. I love Xero as an accounting software. It's a really powerful tool that gives me an up-to-date overview of where I am standing financially, all right? And so that's the figure that you want to take, all right? And that's the figure that you want to base your 20 to 30% profit, 20 to 30% tax on. And then again, you want to go back to your dashboard or your bank accounts, all right? And you want to take a look at your tax and see how much is left in there and make sure that's enough, okay? All right, awesome.
That's so helpful, Sam. Thanks so much. And
No problem.
I've spoken to a few accountants, and they just love when people use Xero or another digital tool, and they don't just rock up with like a whole shoebox worth of receipts and stuff. Xero does have the capability for the mobile app as well. And we were actually chatting with Brooke Neal from All About Balance. She's a former Olympian, and she was saying that she uses Xero and the app on her phone, and what's great is when she gets a receipt, she just scans it right into the app.
Exactly. Yeah,
it's just totally paperless. So
exactly. And we encourage a lot of our clients to do that as well, and we also encourage our clients to use Hubdoc, which works together with Xero. It does the same thing. It scans in receipts, but it reads them better.
Hubdoc. Is it? Okay, I'll find a link.
It's actually owned by Xero as well.
Oh, okay.
Yeah. Uh-huh.
They're a really beautiful team, and I know that I'm not here to promote one platform over another, but just to, since we're talking about Xero, they do, if you are a member with them, they do provide mental health care to anybody who is registered with them, and that extends to your family as well, because they realize that a lot of business owners experience a lot of stress, and so they've kind of put that as a part of their business model, is helping to maintain mental health, which is really beautiful. I've just dropped Hubdoc into the chat here, and I'll drop it in across the other platforms in a moment. And if you're new to Xero and you're trying to use it yourself, we've done probably about 20, I want to say like 20 sessions or something with Xero that are all on the website. So if you just go and into the search engine and type in Xero with an X, then you will, because it is, right? Because you don't think about that. Yeah, it's Xero with an X. If you type that into the search engine on the website, Digital Boost website, it'll take you to the archives of all the sessions, but also some short videos that they've bite-sized video content that they have submitted as well. So you can get a little bit more of an informed decision there and just see how the tool works yourself.
Yep. Yeah. And I think if you've joined my previous talk, I was also talking about other accounting platforms that are available out there. I love Xero personally myself, but I do understand that they are priced a little bit higher than some of their competitors in the market. So if you feel like Xero is not really within your budget range, there are a lot of other accounting softwares that you can use out there. And you should be able to do a lot of the same things that I've shown you on Xero today.
Yeah, cool. I'll drop this in the chat as well here on Facebook, because we have quite a few people tuning in there, just saying this is a highly useful information. Thank you. You're very welcome. We're also going to be doing a podcast with Sam in 2 weeks. I'm going to do that with you.
Yeah, 2 weeks. Yeah. Let's go.
It's going to be cool. So if you guys didn't know, there's Digital Boost has an app called Digital Boost Live, and you can download it from the Play Store or from the Apple Store. And we actually have about 6 or 7 podcasts on there currently. So if you want to be able to kind of learn on the go, get the app. It's free. And coming up soon, Sam will be on there as well. So that'll be really cool. So thank you so much, Sam. I think the questions you've answered them as we went. So we don't have a backlog of questions, which is quite nice.
That's quite a relief.
So we're doing pretty well. Just lots of people saying thank you. And I think we're good. I'll give everybody just a moment, because there was a person who awesome sesh. You're very welcome. I'm so glad you enjoyed it. Thank you so much. Thanks, team, for another great session. You're very welcome. And we've got you coming on again, I think maybe at some point. We'll definitely lock in some sessions for next year.
Yeah, we'll definitely lock in some sessions.
Pressure.
Yeah. No pressure. Yeah, that's right. I quite like doing this. Yeah.
All right, folks. Well, have a wonderful weekend. Like, this is our last session for the week. So everyone on the various platforms, have a wonderful weekend, and wishing you all well. Thanks, Sam, again. Appreciate it.
Hey, that's all right. No problem. And as always, our website's right there. If you do need personalized help one-on-one, get in touch with us.
It's in the chat as well, so you can click right on the link if you go in the chat. All right. Ka kite, everyone.